Shalom. First and foremost, I'd like to give all praises and glory and honor to Yahweh, Ba'ashem, Yahweh Shai, Ba'ashem, Wakar Double honors to the elders and apostles of Great Millstone, preaching His word truthfully and sincerely. And shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely. And shalom to the Akim, that be like unto the speckled bird, preaching the word truthfully and sincerely. Shalom to you, Akim out there. And this is a sit-down lesson of another news article that I'm about to bring out from CNBC.com. This was published and updated on Friday, December 30th, 2022 at 4:06 p.m. Eastern Standard Time. And this was by Jess Pound and Semester Subin. And it reads, the stocks fall to end Wall Street worst year since the 2008 of the S&P 500 finished 2022 down nearly 20%. Right, so the S&P 500 went down along with the Dow Jones. I believe that was negative 73.12, and the S&P 500 went down 20%, of the worst since 2008. And the NASDAQ composite went down as well too. It says the stock slipped on Friday to end 2022 with a whimper as Wall Street wrap up its worst year since 2008. On a sour note, the Dow Jones average slid negative 73 points, which is 73.12 in negative range points, or 0.2%, and the S&P 500 shed 0.3%, with the NASDAQ composite tickled down to 0.1%. The major U.S. index had a rough 2022. The NASDAQ alone was down 33% for the year, and that's a data statistic right here. As you see in the dark blue, the Dow Jones from January until now, from January 2022 on to January 2023, it was a definitely up and down slope, along with the S&P 500. The S&P in the yellow coloring from January 2022 to January 2023, and a up and down slope of 19.2% from January 2022 to January 2023. And so the Dow Jones, S&P 500, and the mainly focus on the the NASDAQ alone was down 33% from January 2022, and entering January 2023 is going to be down 33%. Fridays marked the final day of a trading in what have been a painful year for stocks. All the major averages suffered their worst year since 2008 in a snap and three-geared one screw. The Dow fared the best of the index 2022, down about 8.8%, and the S&P 500 shrank 19.4%, while the tech-heavy NASDAQ tumbles 33.1%. A sticky inflation and aggressive rate hikes from the Federal Reserve battle growth and technology stocks and weights on investors' sentiment throughout the year. Geopolitical concerns and volatile economic data also kept markets on edge. When we had everything from the you-know-what problems in China into the invasion of Ukraine, they all been very serious. But for investors, it is what the Feds is doing, said Art Cashing, director of floor operations for UBS on exchange. As the calendar turns to a new year, some investors think the pain is far from over. that they expected the bear market to persist until a recession hits or the federal pivots. Some also project stocks will hit a new low before rebounding in the second half of 2023. I would love to tell you that it is going to be like the Wizard of Oz, and everything is going to be a glorious color in a moment or two. I think we have a bumpy first quarter, and depending on the Feds, it may last a little longer than that, Cashin said. Despite the yearly losses, the Dow Jones and S&P 500 did break a three-quarter losing streak. The tech-heavy Nasdaq, however, muddled through its fourth consecutive negative quarter for the first time since 2001. All three averages are in negative in December, however. So yeah, as we see, I just got through with the reading as once again the stocks crash once again, having its worst stocks crash since 2008 of the S&P 500 crash, nearly 20 points of 2022, and that been the worst since 2008. So, with the continuing pending fears of a recession, with a sticky, as I was reading down on the news article, with the sticky of inflation, Federal Reserve's potentially going to increase more and more with the federal tax hike, even if it's in a risk of a mild recession, potentially, which is might entering in, and especially like when the markets they react to what's going on around the world economically in many different categories as well too. So we're gonna see this trend going to continue. But as of right now, we have right here the stocks fall to end Wall Street worst year since 2008, and the S&P 500 finished 2022 down nearly 20%. So with that, hope this lesson was edifying of this news article that I just read. And so with that, I would like to give all praises, glory, and honor to Yahweh Ba'Shem, Yahweh Shai Ba'Shem HaKarkadash. Double honors to the elders and apostles of Great Millstone, preaching His word truthfully and sincerely. And shalom to the Akim, scattered through the four corners of the globe, preaching the word truthfully and sincerely. And shalom to the Akim that be like unto the speckled bird, preaching the word truthfully and sincerely. And before I close out this sit-down lesson on this December 30th, 2022 at 3:17 p.m. Central Standard Time on this Friday afternoon. So as we entering in the 2023, there's still a potential of a recession, along with the inflation potentially might increase, along with the consumer spending, oil prices, gas prices, as the stocks potentially reacts to what's going on financially, globally, data to statistically, and what the Federal Reserve or what their reaction is going to be, if it's going to lead to a positive gain or a negative gain. So it's going to enter into 23 of that as well too. Even though you still have one more day of 2022 of the markets for this year, if it's going to have a positive gain tomorrow or a negative gain. But as of right now, moving forward to 2023, expect to see the Federal Reserves of Wall Street continues to tackle the inflation, consumer spending, gas prices, and oil prices as well too. And what the stocks going to react economically or globally, or what the federal chair, what type of announcements they going to make. So with that, I will say shalom and a ball.